Welcome, everyone, to the Lee-Chandler Commercial Finance Podcast. My name is Marcus Baker. I'm an analyst with the investment team. Today, I am joined by my colleagues, Rebecca Hong and Bray McIntosh. Today, we are continuing our multi-part series on strategies that are useful in real estate investing. But before we start, let's have a fun fact for the today. Despite COVID concerns, home sales in California, particularly in Los Angeles, continue to rise. Real estate investing is a low-risk way to diversify wealth, and rental properties can provide a good source of cash flow. Today, we are focusing on the topic of identifying and evaluating target markets. First, I will discuss the attributes we use to evaluate these metropolitan statistical areas, or MSAs. Next, Bray will discuss how to segment the market within a metropolitan area. And last, Rebecca will walk through an example of how we pick the targets for one of our current clients. The first step for picking a target market is to survey your client. If you're in business for yourself, well, your client is you. The main things you're wanting to look for are what states do you like, or which would you be happy to own a property in, and what size of market are you interested in? We usually break these up into primary, secondary, and tertiary markets. Your primary market is any metropolitan area with a population above 5 million. Your secondary markets range from populations of 2 million to 5 million. And your tertiary market is just anything that's under 2 million. The Census Bureau will provide information on all of the areas, and you can find a helpful little a chart on Wikipedia and a couple other sites that will tell you which MSAs fit into which or how much population each MSA has. Sorry. For each one of these areas, we collect the following information. You want the population growth rate per over the past 5 years is good, but we would like to have it over as long of a time horizon as possible. The rental vacancy rate for the area. You'll want the per capita and median household incomes for the area. And just as important, you'll need the cost of living for this area. Your per capita and household incomes don't really give you an idea of how much disposable income people have if you don't compare it to the cost of supplies to live in the area. The last two factors that we usually look at are poverty rate for the area. After all, if people are too poor to be getting around very well, they can't really afford to pay a lot in rent. And then the unemployment rate in the last 5 years. You'll want to try to average that, or try to see if there's a trend either up or down for that. Again, if people are unemployed, they have a hard time paying your rent. Another key thing to look at is whether or not the MSA is particularly favorable towards tenants or landlords. Obviously, as the person buying the property, you want it favorable towards a landlord. And from that, we pick 3 MSAs. Now on to Bray to talk about how to subdivide that area.
Thanks, Marcus. So once you have determined which MSAs are acceptable to you, given this information that you've obtained, you can then subdivide the MSAs. You can divide them many different ways. You can use zip codes, look at boroughs or neighborhoods, census blocks, or you can just choose them freeform depending on your own preferences or interests. Once you've created these segments, you're going to examine a number of factors within each of them. You're going to want to look at schools, as in the quality of the schools. You're going to want to look at the age of the buildings in the area. You're going to want to look at the crime rate for that part of the city. You're going to want to know what kind of rents are typically obtained there, and the property values for those areas. And then also, you're going to want to look to see what kind of amenities, what kind of venues, what kind of infrastructure is available, whether that's sports stadiums to subway stations and anything in between. Once you've determined, based on all this information, which subsections of the MSA you're interested in, you can begin looking for properties in those areas. Now that we've kind of talked about how you pick the MSAs and the specific subsections within them, we can turn it over to Rebecca, who's going to talk about an example of how this is done.
Thanks, Bray. So, for our client in particular, we compiled a list of 8 metropolitan statistical areas for analysis, and we narrowed down our list to our top 3: Denver, Charlotte, and Austin. And I'll just go over the primary factors that caused us to choose these 3 areas. So first we looked at the population growth rate for all 8 of our MSAs and took the average among them. So we wanted to look for growing cities to make sure that in the long term the people who are looking to rent can potentially increase. So we narrowed down our research to 5 MSAs that have larger population growths than the average. And then we looked at the rental vacancy rate and found out that out of the 5 MSAs that had higher than average population growth rates, only 3 had lower than average rental vacancy rates, which were Denver, Charlotte, and Austin. And we wanted to search for low rental vacancy rates to ensure that the properties we buy in these areas have a higher chance of being rented out. Then we looked at the cost of living, median income, and per capita income to assess the ability for the people in these submarkets to pay a higher rent. So Charlotte and Austin both had lower cost of living rates than the average and higher median and per capita income, meaning that we can charge higher rents for the people in both MSAs. However, Denver had a higher than average cost of livings, but it was offset by the median and per capita income being substantially higher than the average. So we decided to add that to our list too. And that's how we sort of narrowed down our search for real estate markets. And now now Marcus is going to close us out.
We hope that these tips help you guys in your real estate search. Identifying the desirable markets is a crucial step in finding strong performing properties. Be sure to check back with us next month where we will continue this series with a discussion of how to finance your acquisitions. Until then, you can email us at investments@lee-chandlerenterprises.com if you want to share any comments or insights, and be sure to check out our website at lee-chandler.net for more insights, articles, and takeaways, and a couple free ebooks even. Thank you and have a good day.